down 0.1%. It was forecast to go up 0.3, and it rose 0.7 in January. So there's some good news. The core rate is flat after a 0.5% gain last month and a 0.4 gain forecast.
Right.
You take out food, energy, and trade. Trade is not trade, international trade. This is retailers and wholesalers, and it's their profit margins. That's up 0.2%, down from 0.6, but it does show, so it shows some fall there. On a year-over-year basis, 4.6% for the headline, 4.4% for the core.
We're going to juggle this.
Tom, I got to throw this in there.
Please.
Because this may move the markets. Empire Manufacturing.
Yeah, I saw that.
Down 24.6 is the number. It was negative 5.8. Now it's negative 24.6. So real dry up there in the Empire Manufacturing numbers. New orders plunged down to negative 21.
We're going to do this differently this time because we've got a number of moving stories here and an exceptionally esteemed guest to join us in seconds here. Mike, I want to move away from this economic data to your interpretation and reading in the last 24 hours of how this Fed will respond to your economic data and our financial crisis. What would you guess they will do?
Well, I don't think the data today makes any difference to the Fed. The Empire is a sort of tertiary index, and retail sales show Americans are still hanging in there, but maybe spending a little less, which they'd like to see some demand come down. And PPI isn't going to change anybody's minds because it's come down. So therefore, that puts 25.
Mike, you and I look at retail. We look at Credit Suisse. Bramo looks at the 2-year.
Yeah, that's what we all should be looking at, because what you're seeing is a complete breakdown, down below 4%, 3.88%, as basically this is a market that has looked at PPI, inflation in the factories coming down much more than expected, retail sales diminishing as expected, and then a weak Empire Manufacturing print. We are looking at a market that's pricing out any further rate hikes and pricing in 100 basis points or more of rate cuts.
But you're a tennis fan, right? I know you like tennis, and this is like going back and forth with the bond trading. I mean, bond traders got to be going crazy. Their accountants are happy because, of course, volatility is good for profits. But it's hard to get a read on what's going on with the economy when you're just looking at yields right now, because they're being pushed around so much by all kinds of news. So
the yield,
where will they be a week from today?
The yield on the published dividend of Credit Suisse continues to rise as the price declines 1.6. I think we maybe even have. I'll stop trading. I'm going to be very careful here in Credit Suisse. The low is 1.5975 quickly.
Well, to that point, if you take a look at German 2-year yields, dropping like a stone as well, 2.54%. Again, what does this mean? Is this economic data enough to write off further rate hikes, or is this a concern about Credit Suisse? Is this a concern about the financial markets? Something breaking at a time of potential real fragility.
It's a bigger concern for the ECB because they meet tomorrow. The Fed has a week.